Welcome back, accounting students. We are working on the final lesson in Chapter 6, completing the worksheet and then posting adjusting entries for a service business. And up until now, you have created a worksheet. You planned the adjusting entries on your worksheet. We went ahead, we completed that worksheet so that we could get income statement and balance sheet accounts, and we had a trial balance. And now the last part here is journalizing and posting the adjusting entries. So first, just a reminder, we're already familiar with journalizing. So we already started doing that in a previous chapter, and that you learned how to do the adjusting entries in back on the worksheet. Okay, so we're just going to journalize and post these entries that we already came up with on our worksheet. So this is actually the nice, easy part. You don't have to decide whether or not you're dealing with a debit or a credit because you already did that on the worksheet. So all that needs to be done at this point is to just record the entry in the general journal. Okay, so that's the really nice part. And there's no document that's associated with adjusting entries. So we don't even have to put a document number because we're getting that information right off of our worksheet. Okay, so one of the things though that you definitely want to keep in mind is that we have to post these entries in the general journal before we can actually put them on each individual ledger account. So let's go ahead and have a look at Lesson 4 in Chapter 6. Journalize and post the adjusting entries for supplies and prepaid insurance. Sounds pretty straightforward. So, journal entries are recorded to update general ledger accounts at the end of a fiscal period, and they're called adjusting entries. So, at the end of a fiscal period, you're looking at month end, and you would always post these then on the last day of the month for whatever month that you're working in. Let's look at some T accounts as we're going here on our supplies. So on January 31st, if we look at what our supply balance would be, it would be $620. However, we realize that we have actually used some of our supplies for the month and that we need to do something to correct our supplies account. We noted from our worksheet that our supplies expense totals $530. So we posted an adjusting entry of $530 to our supplies expense account, and we posted that same amount then, or we entered that same amount in our supplies account so that we could get a new balance of $90 in supplies. So if we look at what we did for adjustments on our worksheet, we can see we did a debit to supplies expense and a credit to supplies. So on our general journal, you can see that we went ahead and we now have an adjusting entry. And for January 31st, supplies expense would be our debit for $530 and supplies would be our credit for $530. Don't forget, you need that heading piece so that you know that you are going ahead and putting in your adjusting entries on your general journal. And you can see that your debit information comes right off your worksheet. Your credit information comes right off your worksheet. And let's go ahead and look at what we did for prepaid insurance. Okay, so we started out with a $900 balance in our prepaid insurance account, but then we used 1 month worth of our insurance in the month of January. So we're just going to go ahead and post then that $150 adjustment to prepaid insurance and to our insurance expense, which gives us our new balance in our T account of $750. So we now know where our debit and credit should be posted, and that should reflect exactly what we put on our worksheet when we completed our worksheet. So the prepaid insurance, we posted a credit of $150, and then our insurance expense, we also did in the adjustments column. Pay attention that we're in that adjustments column of $150. Now, our second adjusting entry in our general journal is going to be for insurance expense. And again, there's no document to reference here. So it's a $150 debit to insurance expense and a $150 credit to prepaid insurance. We posted that in our general journal. Don't forget, again, we have that heading component because we want to make sure we know we're working on our adjusting entries at the end of the month or the end of the fiscal period. And we post our date. Our debit information came straight off of our worksheet, and our credit information, again, straight off of the worksheet. So you can see then we now have some partial ledger accounts after we post our adjusting entries. And you can see on the 31st then, in our supplies ledger, we posted a credit of $530, which takes our balance down in our supplies account to $90. Prepaid insurance, we've got that same thing going on. Here's our credit for $150. Now we can see the balance in that account is $750. Our insurance expense, we are opening this up. It's our very first entry, and so we're opening our insurance expense up January 31st, $150, and we now have a debit balance of $150. Same thing for our supplies expense. We're opening up that ledger account because it's the first transaction we're posting there. All right, so why are adjusting entries journalized? Why would we need to do that? It's to make sure that we update those general ledger accounts at the end of a fiscal period. Where do we get the information that we're going to use to journalize these adjusting entries? And we're going to look at that balance sheet credit column to get that information. All right, so which accounts are increased from zero balances after the adjusting entries for supplies and prepaid insurance are journalized and posted? We just want to remember it's the expense account for each one of those accounts that we'd be dealing with. So insurance expense and supplies expense. All right, that was it. 6-4 is pretty short. So what you want to do now is the work together and on your own. Also, don't forget to complete the online forms for 6-4 so that I can track to make sure you're getting those important concepts. And remember, stop and see me with questions.